Hello everyone, welcome back. We talked about the fair value method and the equity method in last class. In today's class, we are going to begin talk about consolidation. But before we get started, I want to take a minute to review what we learned in last class, especially about the equity method. We learned a lot of journal entries regarding the equity method in last class. Please take a minute, think about out of all of the journal entries we learned in last class, which journal entry or what kind of event would result in an increase in investors' investment account, and what kind of event would result in a decrease in investors' investment account. Please pause your video for now and think about this question. So what kind of event would increase an investor's investment account? There's 4 kinds of events that will result in an increase in investor's investment account. When investor acquires equity investment, the journal entry is to debit investment, credit cash. The second one is when investee reports positive earnings, and the journal entry is to debit investment account, credit equity in investee income. When investee to debit investment account and credit equity in investee income. And regarding the journal entries that will result in a decrease in investors' investment account, we have the following events, and the related journal entry would result in a decrease in investors' investment account. If investor sells equity investment, that will result in a decrease in its investment account. Investee reports a loss, the journal entry is exactly the opposite as to when investee reports a positive earnings. Investee report as a comprehensive loss. This journal entry is exactly the opposite as when investee report positive as a comprehensive income. Investee declares dividend. The journal entry is to debit dividend receivable, credit investment. Investor amortize excess payment. So the journal entry is exactly opposite as this one. To debit equity in investee income, credit investment account. When investor recognize impairment if there's permanent decline in investee fair value. So the journal entry is to debit impairment loss, credit investment account. And lastly, investor defer profit in intra-entity sale. The journal entry is to debit equity in investee income, credit investment account. So this is just a brief overview of all of the journal entries regarding the equity method that we learned in last class. If you cannot recall some of those, please go back to review last class lecture note. And then we're going to begin today's lesson in a minute.